Welcome, ladies and gentlemen, Commodity TV. It's time for a new company introduction. RNC Minerals is a gold producer and works in Australia on 2 mines. The company just announced a record consolidated gold production since acquiring the HGO mine and mill of 9,620 ounces for the month of December 2019 from their Beta Hunt and Higginsville mines in Western Australia. For Q4 2019 was the production at 26,874 ounces gold, and in the second half 2019 they produced over 51,000 ounces gold, exceeding their guidance of 42,000 to 49,000 ounces. The full year 2019 production stood at 64,277 ounces gold. We believe that the company is able to produce well over 110,000 ounces gold in 2020, maybe more, at further falling costs. They achieved a strong cash generation from their operations, and so they paid down $3 million in debt early to reduce the interest costs in 2020 and finishing the year with a strong cash balance of $34 million. The new CEO, Paul Hewitt, is already working on full throttle to over-deliver his promises like he did years ago with Klondex, which was a big success for shareholders. This is now the new RNC Minerals, and the numbers speak for itself. The AISC are falling further down from the guidance of $1,150 to $1,250 per ounce, and we see this in 2020 below a $1,000 per ounce, lifting up the margin significantly. We look forward to the new cost and production guidance then for 2020, as the company is already processing from their centrally located mill, which gives additional cost advantages. The replacement value is around $100 million, and the company has immediate processing cost savings of $100 per ounce of gold. Also, to permit a new mill, this would last 3 years easily, and they have it all. The installed capacity is at 1.4 million tons per year. Let's have a look at the Beta Hunt mine. The gold mineral reserve stands at 3.4 million tons, grading 2.8 grams gold per ton, containing 310,000 ounces. This 2P gold mineral reserve does not account for the potential for high-grade coarse gold occurrences, such as the Father's Day vein associated with the shear zone London sediment intersection. The remaining gold resources have the potential to provide additional reserves, with western flanks and A-zone mineralization remaining open at both depths and along strike. The company drilled over 40,000 meters in 2019 and will move on with this in 2020. The measured and indicated gold resource stands at 10.1 million tons, grading 2.9 grams gold per ton, containing 944,000 contained ounces. The Higginsville gold operations has a 2P reserve of 367,000 ounces and a resource in the M&I category of 1.224 million ounces gold, and inferred around 681,000 ounces gold. Very favorable for the company was the restructuring of the current royalty, which was held by Morgan Stanley Capital Group over a number of tenements at the Higginsville gold operations. Prior to these amendments, the royalty on these tenements was comprised of a 1.75% NSR plus a 50% participation payment on the difference between realized gold price and 1,340 Australian dollars per ounce. The restructured royalty provides for a flat 2% NSR after payment of an adjusted legacy rate on the first 10,000 gold ounces sold per annum. This raises the margin for RNC again. RNC got famous for their high-grade coarse gold, which is still found. In addition to their steady-state mining model, they found over 4,950 ounces, providing additional cash generation beyond their forecasts and excluding these high-grade zones in the model. The new RNC Minerals has almost 606 million shares outstanding and fully diluted over 670 million shares. Major shareholders are Westgold Resources with 10%, Eric Sprott with 8%, Van Eck Associates through the GDXJ ETF with 5%, and the management with 2%. Several analysts give the company a target price of $1, for example, like Cantor Fitzgerald, or 80 Canadian cents like the guys from Haywood. A future joker is the Dumont nickel project in Quebec. It is one of the largest battery metals projects by annual output and the second largest nickel reserve in the world. It is fully permitted and saw an updated feasibility study completed in 2019. RNC has 28% ownership in a joint venture with Waterton. It has a $920 million NPV and an IRR of 15.4%. When the battery manufacturers move more into nickel usage, this large project will be for sale or will be developed directly, and RNC will benefit from this, of course. I'm a shareholder of the company, and I think there is a lot of upside potential. Thanks for watching us, and bye-bye from Switzerland.